what it says, Messrs. Highway Constructions undertook the construction of a highway on 1st April 2013. The contract was to be completed in 2 years. The contract price was estimated at 150 crores, but up to 31st March 2014, that is the end of first year, company incurred 120 crores on the construction cost, and the engineers involved in the project estimated that a further 45,000 crores would be incurred for completing the project. Now, can I say 120 crores plus 45 crores, the total cost incurred for the project will be 165 crores, correct? And the revenue that you are going to earn is only 150 crores. So can I say there is an overall loss on the project? And we learned that, sir, if we estimate in the beginning of the year, that is in the beginning of the contract in the first year, that there is an overall loss on project, as per AS7, we have to recognize the entire loss of 15 crores in this case in the first year itself. But sir, technically what will happen? Some actual loss will come. That is revenue minus cost, some actual loss will come. But the balance loss has to be recorded in the form of a provision. We have to create a provision for loss. You might have also seen in question number 1. Right? It's a similar type of question. Now they ask you, what amount should be charged to revenue? Charged to revenue means what amount should be debited? What amount should be debited to the P&L account for the year 13-14 as per the provisions of AS7 construction contracts? So technically, sir, as per AS7, I have to debit the entire 15 crores of loss in the P&L account for the year 13-14 itself. And they have also told me to show the extract of the profit and loss account. Now, if you remember, in one of the examples, I drawn the P&L extract and showed it to you. The same extract has to be drafted in this question also. Right? So let us solve this question together. Right? So we have to work out the percentage of completion also to find out how much revenue will be recorded. Then revenue minus cost, we will get the actual loss for the current year. Then actual loss will be compared with the total loss. Say, for example, if actual loss comes to 8 crores, but the total loss is 15 crores. So difference between the two, 7 crores, we have to create a provision for loss, right? So let us do the question together. Okay, let us start. Question number 2. First, contract revenue is equal to rupees 150 crores, right? Then cost incurred till date, that is 31st March 2014. Right? It is 31st March 2014, right? Okay. That is equal to 120 crores plus further estimated cost equal to 45 crores. So 165 crores is the total estimated cost. Correct? So I'll say therefore overall loss on project is equal to total estimated cost minus contract revenue, that is 165 minus 150. So you have a total 15 crore loss on contract. correct? So the next thing that we have to do now is work out the percentage of completion. So on the basis of that, we will come to know how much revenue will come, because we know 120 is the cost that is to be debited to P&L this year, but we also should be knowing the revenue. So now I'll calculate. Percentage. Okay. Yeah. Percentage of completion. So what is the formula for percentage of completion? Cost till date divided by total estimated cost into 100, correct? So cost till date is 120, total estimated cost is 165 into 100. So 120 divided by 165%, 72.73%. 72.733% of work is completed. So therefore, revenue to be recognized as on 31st March 2014. So how much revenue will I recognize? Sir, 150 crores multiplied by 72.73%. Now, can I say this is the first year, so there will be no cumulation? Because if there is a cumulation, then I have to subtract less amount already recognized. But since this is the first year, no amount is recognized. So 150 into 72.73%. This comes to 109.095. Take it as 109.10. Right? So therefore, next line, actual loss for the year. So how much is actual loss? So actual loss is, my cost is 120 minus my revenue is 109.1. Right? So 120 minus 109.1. So sir, my actual loss is rupees 10.9 crore for the year. Right? But can I say I have to record full 15 crore of loss? Right? So therefore, provision for loss to be recognized. So how much will I recognize? Total loss minus actual loss. Total loss is 15 minus 10.9 is actual. 4.1 crore. Correct? So I have to create a provision for 4.1 crore in the books of accounts. Correct? Now please add one point. Overall loss on project to be charged to PL account as on 31st March 2014. Just add one more line over there. Right? Now we'll draft the format of the PNL. Extract of PL account for the year ended 31st March 2014. So on the credit side, I will put by contract revenue, which is to be recorded at 109.1. Do one thing, also put a bracket, write it is rupees in crores. Rupees in crores. Then on the debit side, we will put 2 contract cost 120 crores. Correct? Then on the debit side, I will record 2 provision for loss on contract. So can I say we will be providing for 4.1? So to take the total, it is 124.1. 124.1. So here we will have by net loss, the full figure 15. So if you don't provide for the provision of 4.1, your net loss will not come to 15. Your net loss will come to 10.9, which is the actual loss. So we have to record the total 15 crore as the loss for which provision is to be created. Correct? Completed? Please do it. 2-3 minutes. Complete this if anybody is still pending to copy. Full answer in one stream. Fine, completed. Now we'll go for the next question number 3. Now, so this question number 3 is also similar to question number 2 only. So please focus what it says. Aakar Limited signed on 1st April 2016 a construction contract for 1 crore 50 lakh rupees. Following particulars are extracted in respect of the contract for the period ended 31st March 2017. So 1 year is ended, and by the end of this year, these are the expenditures that they have incurred, which says material issued worth 75 lakhs, labor charges paid 36 lakhs, higher charges of plant 10 lakh, other contract costs incurred 15 lakhs. So technically all the 4 costs are contract costs. And if you take the total of all these 4, this comes to 136 rupees. That is 136 lakhs. That is 1 crore 36 lakhs. Then further they say, out of the materials issued, means out of this 75 lakhs of material issued, material lying unused at the end of the period is 4 lakhs. So this is the unused material. They have not used this. So can I say if they have not used it, it has to be subtracted? Because unused means you have not incurred the cost for it. So this 4 lakhs will get subtracted from this total cost of 1,36,000. 1 crore 36 lakhs, sorry. Correct? Then labor charges of 2 lakhs are still outstanding. Now can I say outstanding expenses are to be added up because you have incurred the cost but not made the payment. So technically on accrual basis, it has to be added up. So see, I have added up 2 rupees over here. So 136 total cost minus 4 rupees unused plus 2 rupees outstanding. Then it is estimated that by further spending 33,50,000, the work can be completed in all respect. So can I say this 33,50,000 is the further estimated cost? So if I add up the further estimated cost 33.5, my total cost of the project is 167.5. That is 1 crore 67 lakh 50,000. The total estimated cost of the project. 1 crore 67 lakh 50,000. But sir, the total revenue is only 1.5 crore. So can I say there will be an overall loss of 17.5 crore, right? And out of this 17.5 crore, some loss will actually come in this year because cost will be greater than revenue that we recognize. So actual loss, something will come, and balance we have to create a provision. Correct? Because entire loss of 17.5 lakh has to be recorded, right? You are required to compute the profit or loss to be taken to the profit and loss account, and additional provision for foreseeable loss. So they are telling you what is the actual loss plus what is the provision that you are going to create. You have to tell both the figures. Plus you also have to tell them what will be the total profit or loss to be debited to P&L. So can I say total is 17.5? So this is exactly a similar question as question number 2, right? So I have a drafted solution for this. We will be noting down the solution. Now, please focus. I'll just explain the solution, then you can copy down. Contract revenue is 1 crore 50 lakh. Correct? Contract cost incurred. So whatever we did rough calculation, we are doing it in a fair manner over here. Material plus labor plus hire charges plus other contract cost minus unused material plus outstanding labor. Total cost 1 crore 34 lakh for this year. Total cost 1 crore 34 lakh for this year, right? Then further estimated cost 33 lakh 50,000. So total cost will be how much? 1 crore 34 lakh plus 33 lakh 50,000. Total cost is 1 crore 67 lakh 50,000, right? Then percentage of completion is calculated. That is cost till date 134 divided by total cost 167.5. You get exactly 80%. So how much revenue will you record? 1.5 crore multiplied by 80%. Answer is 1.2 crore. Correct? Then, therefore, loss on contract to be recognized in P&L. So total loss will be how much? 1.675 crore minus 1.5 crore revenue. Total loss 17 lakh 50,000 to be recorded in P&L. Now, out of this 17 lakh 50, what will be the current year loss? Sir, in current year, 1 crore 34 lakh is the expense that I will debit, and 1 crore 20 lakh is the revenue that I will credit. So technically 14 lakh rupees of actual loss will be debited this year, right? But should I debit 14 lakh or should I debit entire 1750? Entire 1750. So therefore provision for loss to be created will be 1750 minus 14 lakh. 3 lakh 50,000 will be the provision for loss. So same to same as question number 1 and 2, right? Simple question. And what I'm doing is I'm showing the entire solution in one page only, so that no need to scroll. You can just entire solution in one place. Please copy this down. I'll go for question number 4. Question number 4. This is a very, very good question and bit lengthy also. In exam, this has come at least, I think, 3 or 4 times. So very good question. Let's solve this question. What it says: a construction contractor has a, just a minute. Yeah. What it says, a construction contractor has a fixed price contract for rupees 9,000 lakhs to build a bridge in 3 years time frame. So if it is 3 years time frame means it's definitely a long-term construction contract, and AS7 will be definitely applicable on it. A summary of some of the financial data is given. Technically, they have given you data for 3 years. So they are expecting 3 years of calculation by us. No problem, sir. Let us first discuss year one. Initial amount for revenue agreed in contract means this is your contract price which is fixed at the beginning, 9,000 lakhs. Then variation in revenue. In first year, there is no variations. I think you're aware about variations. Variation applies when there is a change in the scope of work. So when some change in the scope of work takes place, so you can definitely charge for the variations. So in the year one, there are no variations. Contract cost incurred up to the reporting date. Up to reporting date means up to the year end. As on 31st March, total cost incurred is 2093. And they also say that estimated profit for the whole contract. So basically, this is a profit contract. So on the whole contract, there is a profit of 950. Now, can I say one thing is missing? That is total cost or total estimated cost. But sir, can I say revenue? Revenue minus profit will give me total cost. Right? So revenue is 9,000 minus total profit is 950. So 9,000 minus 950, 8,050 rupees will be my total estimated cost. And total estimated cost is required for what? For calculating percentage of completion. Correct? Now let us go to the second year. Sir, 9,000 initial contract value will remain the same. But now you can see variation of 200 is coming into picture. So from the second year onwards, my total revenue will be 9,200. Right, including the variations. And sir, if you remember, with respect to variation, with respect to escalation, incentives or reimbursements, I had written a point over there. You should be recognizing this as a revenue only when you are 100% certain about its ultimate collection. Right? And see, the point is given. The variation in cost and revenue in the year 2 has been approved by the customer. So since it is approved means it is a certain that we are going to collect it. So 9,200 will be considered as my revenue, right? Then it says cost incurred up to the reporting date is 6168. Now please understand this 6168 is the cumulative cost. That is total cost incurred. That is year 1 plus year 2. Total cost incurred is 6168. But sir, there is a star mark over here. So let us read what is this star. So this is actually that star, first star and second star. So what is the first star? It says includes 100 lakhs, for the standard materials stored at the site to be used in year 3 to complete the work. Now can I say here, this 6168 includes 100 lakh rupees of material which is purchased this year, but technically is going to be used in the third year. So can I say in this year, I have to subtract 100 rupees. So when I subtract 100 rupees, my cost for second year will be 6068. Correct? I hope you are getting this point. And they say that total estimated profit is 1,000. Now, can I say estimated profit increased as compared to the first year? And what will be the reason? Because of variations. Right? So now, as per your second year, if your total estimated profit is 1,000 and your revenue is 9,200, what will be the total cost? 8,200. That is 9,200 revenue minus 1,000 rupees estimated profit. 8,200 will be the estimated cost. Correct? Going on to the third year. 9,200 revenue. Cost till date. Now this is cumulative cost 8,100. But can I say the cost should be 8,200? Because by the second year end, your total cost should have been 8,200. So in third year also, your total cost should be 8,200, but it is 8,100 only. Let us read the 2 star. It says it excludes 100 rupees of material, which is used in third year and which was brought from the second year. So this 8, am I audible? Okay. So this 8,100 is not including that 100. So what you have to do is add up the 100 over here, the material that you have used, add 100 over here. So this will become how much? 8,200. Excludes 100 lakh for standard material brought forward from second year. So when you brought it forward from the second year and used it in the third year, so technically it should become an expenditure of the third year. So in 8,100, we have to add that 100. So my total cost becomes 8,200, right? Total revenue is 9,200. So profit is exactly matching at 1,000. Correct? What have they asked us to do? Compute year-wise amount of revenue, that is yearly revenue, yearly expense, yearly that is contract cost to complete, and profit or loss to be recognized in the statement of profit or loss as per AS7. So sir, technically we have to draft a P&L account for 3 years. Plus we also have to show the workings, that how much revenue should be recorded, how much cost should be recorded. So all such workings are also required. So we will solve this in a tabular form. So what I want is from you people, I have a format already drafted. I want you people to make these two formats as it is. Figures, I'll fill it with you. I'm just cancelling all the figures. So these are the two formats that you have to draft. First is the statement of profit and loss for 3 years. This is rupees in lakhs. I'll do one thing. Yeah, I'll zoom this. This is the first format. This is the actual profit and loss account you have to draft, showing 3 columns. First is the total column. Total column is nothing but the cumulative column. Second is amount already recognized. So total minus amount recognized. The final figure will be amount to be recognized. And technically the last column, these figures go to P&L account, because these are the amounts to be recognized per annum. So please draft this table first. You have to draft this table first. So year wise, simply we will show year 1 revenue, cost, profit. Year 2 revenue minus cost, profit. Year 3 revenue minus cost, profit. So 3 years we have to show. This is the first table. This is the extract of your P&L account. This is the second format that you have to draft. Now this is the actually the main lifeline of the question, because once we complete with the second table, that is the working note table, in the first P&L you just have to copy paste the figures. Calculation of percentage of completion and revenue to be recognized. So we will be first completing this table. And once this table is done, then the P&L is just a fill in the blanks. Shall we start? Please do it. Let us first fill the table, which is the working note, and this will be the base for creating the profit and loss account. Now, sir, can I say in the first year? Let us go year by year. First year, the contract revenue is 9,000 lakhs, and the estimated profit given is 950. So contract revenue minus estimated profit will give us estimated cost of 8,050. Correct? And question gives that cost incurred till date is 2,093 rupees. Cost incurred till date is 2,093 rupees. So can I say on the basis of this information, we can calculate the percentage of completion? Okay. So I'll calculate the percentage of completion. I'll show up in the bracket 2093 divided by 8050 into 100. I think we get some 26%. Right? So how much revenue to be recorded? Sir, 9,000 lakhs into 26%. So 2340 will be the revenue recorded. I'm showing this 9,000 into 26%. 2340. Right? So how much revenue will be recorded in the current year? Sir, can I say entire 2340 will be recorded in the first year? Because this is the first year, so no accumulation will come. Correct? So this is first year done. Go to second year. Second year, can I say the revenue is 9,200, including the variation? And estimated profit given in the question is 1,000. So contract revenue minus estimated profit will give us total estimated cost at 8,200 rupees. Correct? Then cost incurred till date. Sir, it is 6068. I'm putting a star because I've shown the working note below. You can see it over here. 6168 minus 100 unused material. So it is 6068. So on the basis of this, now I'll calculate the percentage of completion. 6068 total cost divided by 8,200 total estimated cost into 100. So 6068 divided by 8,200%. So sir, 74% of the work is completed. Now please understand this is cumulative now. This 74 includes 26% of last year also. So how much revenue will be recognized? 9,200 into 74%, 6808. That is 9,200 into 74%. 9,200 into 74%, 6808 will be the revenue that will be recognized. Right? But how much in the current year? How much in the current year? Entire 6808 or 6808 minus already recognized 2340. So in the current year, 6808 minus already recognized 2340. So only 4468 revenue will be recorded in this year. Right? Now we'll go for the final part. Contract revenue 9,200 in the third year. Estimated profit is same 1,000. So total estimated cost will come to 8,200. And even the cost incurred till date is also 8,200. I'm putting a double star because it is 8,100 plus 100 rupees unused material. Unused material brought from second year which got added. So percentage of completion is obviously 100%. So how much revenue to be recognized? Sir, full 9,200 by the end of third year. But how much actually will be recorded? Sir, I will say out of 9,200 minus 6808 is already recorded till second year. Right? So 9,200 minus 6808 is already recorded in first and second year both. So 2392 will be recorded in the third year. 2392. Right. So this is your first table. And now it will be only fill in the blanks. Shall we start? Okay. Now, year one. So revenue is 2340, cost is 2093. Revenue is 2340, cost is 2093. So we have a profit of 247. Can I say amount already recognized will be dash because this is the first year, so no accumulation will come. So directly in the final column also 2340 revenue, 2093 cost, 247 profit will be recorded. Now technically the third column will represent all the amounts that will go to P&L account. Because the first column is total, second column will cancel the cumulative effect. So finally the third column is the column of which the figures will go to P&L account. Go for year two. Sir, year two total revenue is 6808 and total cost is 6068. So the difference is 740 rupees profit. Can I see we have amount already recorded in the first year? And this is the cumulative figure. So to avoid the accumulation, I will show 2340 recorded last year as revenue, 2093 already recorded as cost, and 247 already recorded as profit. Right? So what is the net amount that will be recorded in the P&L? So net amount will be nothing but 6808 minus 2340, which we already calculated as 4468 in the below table. 4468. How much will be cost? Sir, 6068 minus 2093 already recorded cost. So 3975 will be the cost. So minus 4468. 493 will be the profit to be recorded. Right? And finally, we'll go for year three, that is revenue and cost of year three. Sir, year three total revenue is 9,200, total cost is 8,200. So the total profit has to be 1,000. Right? What is the amount already recognized? Sir, up to the second year, that is first and second year together, 6808 revenue is recorded and 6068 cost is recorded and 740 worth of profit is already recognized in the P&L. That is cumulative of first and second year both. So how much revenue will be recorded in the third year now? That is 9,200 minus 6808, which we have already calculated in the below table as 2392. And cost will be 8,200 minus 6068, 2132 cost. And the difference between revenue and cost, 260 rupees profit will be recorded in the third year. Right? Mark this question as important from the exam point of view, because already 2 or 3 times the same question has been asked, same figures they have used. You have to draft it in the same manner in exam. So this is the first table. And I'm also showing the second table once again. If anybody has pending to copy, you can take a screenshot. First, I have showing the second one now. Fine. Okay, I hope everybody has completed copying. I will go for the last part of the standard that was left that day. That is with respect to the disclosure requirements. So it is very simple. Understand what are the disclosure requirements. An enterprise should disclose the method used to determine the stage of completion. Means how much percentage of the work is completed. And can I say we are using cost to cost method? That is cost incurred till date divided by the total estimated cost. That is called as the cost to cost method. See, cost to cost method. We use the cost to cost method to work out the percentage of completion. So that is the accounting policy that you have to say. And to recognize the revenue, we calculate what? Percentage of completion. So to recognize the revenue and method used to determine contract revenue. So the method used to determine contract revenue is what? Percentage of completion method, which in shortcut we also call it as PCM. Correct. So these are the two accounting policies that has to be derived or that has to be disclosed. But apart from there, these are the further disclosures that has to be given. Now, what are the further disclosures? Sir, very simple. Amount of contract revenue recognized in the current year. So whatever revenue you have recorded in the P&L, that also has to be shown in the notes to accounts. Followed by whatever contract cost you have incurred in the current year, that also has to be disclosed with the profit recognized. So in short, revenue, cost, and profit, whatever you have recognized in the P&L, everything will be disclosed in the notes to accounts also. Followed by if advance is any received from the customer, that is from the contractor you have received in advance, please disclose the amount of advance also. Leave D and E, go to F. What is point number F? Retentions. Retention means money withheld by the contractee and will be paid after a certain period. And generally, this is a very common point, retentions, because I'll tell you one thing, contractors are not trustworthy. And if you make the full payment to the contractor, they will not complete your work on time. They will do all the ifs and buts. So always certain amount is retained. And certain contractors give the warranty also, 6 months warranty on work, 1 year warranty on work. So some contractees, they withhold the retention money for up to the end of the warranty period. 5% of the contract value, 3% of the contract value, they will retain. Why? Because if you pay them, they will not show their face to you. Warranty, everything is gone. So that is called as retention. So if any amount is retained by the contractee, that amount has to be disclosed in the notes to accounts. Right? But the most important part of disclosure is point number D and E. And on that, we have to discuss for the next 10 minutes. Very, very important. And trust me, practical question can be asked on the point number D and point number E. Practical question for 5 marks. Now, please understand. This, just have a look at this example that I have put over here. Say 100 rupees worth of work is done and 75 rupees worth of progress billings are made. Progress billing means we are actually demanding some amounts from the contracting, because to complete the work we require funds, right? So as soon as the work gets completed, we demand certain funds from the contracting. That is called as progress billings. So say for example, if 100 rupees of the work is done and I have collected progress billings worth 75 rupees from my contractee, I can say that 25 rupees is still due from the customer. Yes or no? 25 rupees is still receivable because I've completed work worth 100 rupees and I've collected only 75 rupees from you. So still 25 rupees is receivable from you. That is due from the customer. But on the other hand, if 90 rupees of work is only done and we have progress billed 120 rupees from the client, means we have collected 120 from the client, or we are in a position to collect 120 from the client. So can I say 30 rupees is collected extra from the client? And this is called as amount due to the customer, means it is payable back to the customer. If the work is not done, obviously. If we complete the work, then no problem. Right? So this point and this point is your point number D and E. And if you see the formula, you will find it difficult. So let us make it very simple. Can I say cost plus profit is equal to revenue? Right? Cost plus profit is revenue. Everybody agree? Okay. Can I say cost minus loss is also revenue? See, have a look at this P&L account. Revenue is 90. Revenue is 90. Cost is 100. So can I say loss will be 10? Revenue is 90. Cost is 100. Can I say loss will be 10? So can I say cost minus loss is revenue? Cost is 100 minus 10 rupee loss recorded. 90 rupees will be revenue. Yes or no? So both the formulas give me the same answer. Cost plus profit is also revenue. And cost minus loss is also revenue. Right? So what is the formula? Gross amount due from customer. Gross amount due from customer means it is receivable from the customer. How to calculate that? Sir, cost incurred plus recognized profit. So can I say cost incurred plus recognized profit is nothing but revenue? Right? Cost incurred plus recognized profit is nothing but revenue. Or cost incurred minus recognized losses is also revenue. Right? This bracket closed minus progress billings. So it is technically what you know. It is technically what you know. Revenue minus progress billings. So if you have recognized the revenue worth 100 rupees in your books and progress billings are made only to the extent of 80 rupees. So you have recorded 100 rupees of revenue and progress billings are only 80 rupees. So can I say 20 rupees is due from the customer? Correct? But on the other hand, the revenue recorded is only 90 rupees. Revenue recognized in the books is only 90 rupees and the progress billings are worth 105 rupees. So can I say you have collected more than what you have recognized in the books? So technically 15 rupees is called as gross amount due to the customer. Just we have changed the formula, opposite formula. Progress billings are now greater than the revenue. That is why progress billings minus cost incurred plus recognized profits or cost incurred minus recognized losses is nothing but revenue. So here I can write it is progress billings minus revenue. As simple as that. Right? And this is just a disclosure that you have to give. I've put some examples also to make you understand. Say, cost is 100 and 20 rupees profit is recorded. So can I say cost plus profit 120 will be the revenue that will be shown in P&L, right? And progress billings are 105 rupees. So I can say 50 rupees amount due from customer. Amount due from customer is nothing but receivable. Correct? Check here. Cost is 100 and total loss recorded. When I say loss means total loss on the project, because you have to recognize the overall loss in the first year only. Correct? So total loss on the project is 20. So 100 cost minus 20 loss, revenue will be how much? 80, because cost minus loss is revenue. Progress billings are only worth rupees 70. So again I can say 10 rupees due from the customer. Means it is receivable. Right? Now see the third example. Revenue recorded is 120, but progress billings are made worth rupees 130. So I can say amount due to customer this time because you have collected more than what you have recognized. So 10 rupees will now be considered as amount due to customer, that is payable. Right? So please keep it very simple, or I would also say that please keep it simple. Revenue minus progress billings. Always use the same formula. Revenue minus progress billings. If answer is positive, it is amount receivable. If answer is negative, it is amount payable. So use same formula only. Right? So if answer is positive, that is revenue minus progress billing. Answer positive, amount due from customer. If answer negative, amount due to customer. As simple as that.
Yeah, sir. Sir, can we say amount due from customer as retention money?
No.
Yeah, because retention is withheld and
Sir, see, sir, please understand. Money is retained at the end of the contract.
oh, this is at the middle, sir. This one is.
We are in the mid of the contract every year, and partially I can say you are correct also.
Okay.
Right, but generally the retentions are done at the end of the contract only.
Okay, sir.
Right, because you as a contractor don't know what is the revenue recorded by the contractor, so you cannot say that it is retention.
Yes, sir.
Right. Now, last point with respect to progress billings. Progress billings will be equal to progress bill received plus progress bill receivable. Means in the question they will say that progress bill amount received 50 rupees and progress bill amount receivable means you have raised the bill, means you have sent the request for payment, but it is receivable, they have not yet made. So progress billings will be equal to received plus receivable both. So if I say that in the question it is given progress bill received is 50 rupees and progress bill receivable is 25 rupees. So you will consider both of them, that is received plus receivable. So total progress billings will be how much? 75. Right? So don't make this mistake in exam. Only one time I think this question was asked. Calculate the gross amount due to customer or due from customer. Right? So always remember, total cost incurred plus profit is equal to revenue, or total cost incurred minus loss is equal to revenue. So first calculate your revenue. Once you have your revenue with you, then revenue minus progress billings. Revenue minus progress billings. Right? So you can just take a screenshot of this entire disclosure in one screen and you can copy this down. So here I conclude AS7. So we are now at par with the morning batch. So tomorrow what we'll be doing is we'll be completing AS12 and then we will also be starting with AS10 tomorrow. That is property, plant and equipment. Right? So please take a screenshot of this. Right? So we'll sign off for the day now.